As the country stares at the prospect of a repeal of the law capping interest rates, the Central Bank of Kenya now says shareholders of commercial banks need to accustom themselves to lower returns than they were used to in the pre-rate cap era. According to CBK Governor Dr. Patrick Njoroge, the banking sector has entered a new norm in which banks ought to accept modest returns if they are to put the interests of borrowers first. Fears abound that a repeal of the rate cap could see banks return to high interest rates, which are perceived to be punitive in some instances, in a bid to boost their interest income. The governor was speaking at the launch of the International Monetary Fund's Regional Economic Outlook report.
If you think, for instance, the returns on equity in our banking sector, they were quite large, quite high. And we have to come back down towards, and they have already begun coming down, or they have actually come down. They still have some ways to go, but they need to come back down to sort of norms that, much more in other parts of the world and so forth.
And on the global front, the European Union has granted the United Kingdom a 3-month extension for Brexit, bringing relief to the British public and to the EU bloc, as well as given that the Britain was on the course to leave without a deal this week. The EU's extension gives room for the UK to leave earlier than the 31st of January 2020 deadline if it so wishes. Brexit has broken Britain, creating a sharp division both at the legislative level and among the public. Like his predecessor, British Prime Minister Boris Johnson has found the going tough in Parliament, with current developments ensuring that his attempts to have Brexit take place by the end of the month, come what may, failing flat on the face. There is an increasing likelihood that a general election will be held to determine the way forward for a divided Britain. This is the third extension that the EU has granted the UK.